Okay, recording this video. It's Wednesday, 16th of April 2014. Hope your trading is going well. So we're back in Sydney, having spent the last 2.5 months in Hawaii on the island of Kauai. Absolutely fantastic place. If you ever get the chance to go, do. And now trying to get used to a different time zone for trading. So the start of the trading day in Hawaii was 3:30 a.m. Here in Sydney, start of the E-mini day session is 11:30 p.m. local time. So gone from one extreme to another. I always find the jet lag worse kind of coming this way, and so it's taken me a few days to kind of get used to that new open. So not back into my trading yet. But I thought I'd do a video on seasonality patterns because we're slap bang in the middle of one of the most important seasonal patterns, which is around tax time in the US, revolving around the 15th of April. And I'm going to give away a couple of seasonality indicators. One is a weekly seasonality indicator and the other one is a daily seasonality indicator. And this one is really quite clever. I'm going to walk you through those two kind of indicators and how to use them. But before doing that, just a couple of words about seasonality patterns. There are 5 particular patterns that I really like. The patterns I like are kind of driven by fundamental reasons for markets shifting, things like tax time. Those are the ones that kind of resonate most with me. You can calculate kind of daily and weekly bias based on statistical analysis of what the stock market has done, but what I've found by doing that in the past is the variation and the variability is quite massive kind of year by year. And so can you actually use these patterns to day trade? I don't think so. I think they're more kind of swing trading and having in the back of your mind in terms of a bias kind of going into a particular time period. So for example, coming into the Christmas rally this year, we had a really strong pattern, and a lot of that was driven by a seasonality kind of tendency, and so there was kind of good reasons why we were rallying fundamentally, and then you could see it in the day trades kind of going on during that period. So I don't use it to make decisions, but it's kind of there in the back of my head in terms of what's going on. And I think it'd be useful just to have a video and a feature article on the 5 particular patterns that I like the most. The first indicator I'm going to show you here is a weekly seasonality indicator, and this one is quite simple. What I did was, back in the day, a few years ago, look back at all the stock market history since 1970 to 2003, detrended the week by week changes in the indices and created this little pattern here. And this shows you what the seasonal bias is for the stock market. And you can see that we tend to have lows made, or a low in the seasonal pattern made kind of at the end of September, October time here. Then we go for a strong kind of period here, rallying into April, May, and then we fall off to those kind of seasonal lows again. So that's the seasonal pattern that you'll see kind of year after year. And all this indicator does is just a lookup table based on what that frequency was, and it just gives you a broad sense of where the market is kind of at that time in terms of seasonality. Now, it does play into this nice maxim that people have: sell in May and go away, and that's where the market kind of tends to top out with in terms of seasonal patterns, and then we have weakness into that kind of September, October period. And you can see this is the period during the year when the stock market is strongest, and this is the period when it's weakest. Now the other little indicator that I put on here is just this vertical line, which repeats at a set number of bars kind of going back in the past. So the way you can use this is to refer to where am I in this seasonal kind of pattern and look back where we were in previous years. And you can see at the moment, mid-April, this is where that we were 52 weeks ago using this indicator. Let me just pull this up. You can see the settings on this indicator is going back for 16 years. That's the back history that I've got on this E-mini chart. And every 52 weeks it prints a vertical line. So I'll add that code into the freebies on this page so you can download that as well. The usefulness of that is you can kind of go back and see, well, where were we and what happened in previous years at the same point in time. You know, we're supposed to have some kind of cyclical peak kind of going on, but did that kind of play out nicely in previous years? You know, judge it for yourself whether you think it's kind of useful or not, but it kind of gives you a broad indication of where the market is kind of heading in terms of these seasonal patterns. 5 seasonal patterns I want to talk about I've marked on this weekly chart with these red vertical dotted lines, starting at the beginning of the year with a Christmas rally. And you can see on the seasonality indicator, it's from this little dip here all the way into kind of the first week in January. And what's going on there at the Christmas rally period is a couple of things. First of all, we've got people in general tend to be a little bit more bullish and positive around a holiday period. We also have people kind of making investments at the beginning of the year, and we tend to have strength in value stocks and small caps around that time. So we've got a little bit of kind of money flowing into the market at the beginning of the year, and that kind of bullish investment outlook driven by people just being generally more kind of positive around a holiday period. So that's the first one. The second one that we're in the middle of at the moment is to do with tax time here, and it's actually a period of weakness followed by strength. You can see again on the seasonality indicator it's kind of driven down here and then driven back up. So a couple of things going on there. First of all, coming into the 15th of April, which is tax time in the US, we get weakness because people need to pay their taxes, and they kind of sell equities coming into that tax deadline on the 15th in order to pay their tax bills. So we get a little bit of weakness happening there. The 15th also happens to be the deadline for tax advantage investments, so retirement accounts, IRAs and so on. So we also have money kind of flowing into the market around that period, kind of boosting it. So it's kind of profit taking kind of coming in, and then money's being reinvested kind of coming out of that, and we're right in the middle of that at the moment. So I'm recording this on Wednesday the 16th before the market opens, and we've had a little bit of strength yesterday, last day and a half, but coming into that we had about 4 or 5 days of real kind of weakness in the market, and expecting a couple of days of strength kind of as we play out that seasonal pattern at the moment. The third one to talk about then is the 4th of July, and it's a little bit of a dip here on the seasonality indicator leading to this little bit of strength. And here again, kind of a long holiday period. People tend to be a little bit more bullish. It's kind of a classic in terms of those holiday periods where people tend to be a little bit more positive about things. Then we have the September effect, and this is weakness that kind of comes into this period here on the seasonality indicator, leading into, it's quite a long period of weakness, 4 or 5 weeks kind of going on here. And there's a couple of things going on. The first one is tax loss harvesting. So mutual funds have their end of financial year 31st of October, and they're often selling losing positions leading into that October period in order to take advantage of tax losses. So we get weakness kind of coming into September and October there. But then on top of that we also have profit warnings coming out. So if we have corporates that are expecting weak numbers at the end of the year, they'll often try and telegraph that with some kind of profit warning in the third quarter. So that might be playing into this. So we've got a double whammy happening of kind of negative news, and that's what's driving this kind of seasonal kind of pattern here, that leading to quite a lot of weakness for 3 or 4 weeks. And then the last one to talk about is Thanksgiving, end of November, and you got this little bit of strength here in this seasonal pattern. Again, it's one of these holiday periods. Market tends to be a little bit bullish. People in general are kind of more positive just because they're having fun, and so the market kind of tends to drive up a little bit. So there we go, 5 little seasonal patterns. I'm going to show you on a daily chart how you can kind of pick them up. Okay, now this second seasonality indicator is quite different from the first one. The first one was simply a lookup table using the data from 1970 to 2003 to calculate this line on a weekly chart. And it was quite laborious to do this work. At the end of each year I'd load up the data for that weekly data for that particular previous year, detrend the data, take out any kind of outliers, and kind of add it back and average the data going back to 1970. So rather than doing that, we use an indicator that kind of dynamically calculates what's going on. And based on the amount of data that you load back into the chart, it calculates what the daily movements are, averaged over a long period of time, and then outliers kind of taken out of that. And it calculates above and below this zero line some kind of bias in terms of a 3 or 4 day kind of outlook here. So again, those 5 little seasonal patterns I've kind of marked on the chart here. The first one is the Christmas rally, kind of leading into this, beginning of this 2013 here. You can see seasonality wise, going back over a number of years for this indicator, you can see that's the pattern that you're trying to catch during that period of time, coming into the beginning of the year, first week in January kind of going on. The second pattern then is the weakness and then the strength coming into the tax time, 15th of April in the US, and that starts around here with a sell-off and then a rally back, and that's what we're in the middle of kind of doing at the moment, kind of going through this pattern down and then up. The third one then is the 4th of July kind of period here, so just leading into that 4th of July you can see we've got a little bit of a dip, then leading some strength here. Then we got the September effect happening here, and we're trying to capture this kind of weakness coming into during September. You know, you might kind of gauge it from around here or kind of later on, but it kind of lasts for 4 to 6 weeks there in terms of that weakness that's happening during September. And then lastly, Thanksgiving rally kind of starting around here, leading into the end of November, and that little kind of strength that we get kind of in the market there. So that's on this daily seasonality indicator that I've marked those kind of 5 patterns. What I've done here on this chart is just show you the vertical dotted line going back another year, and again let me just show you the inputs to this one. Same indicator on the vertical line going back 5 years, but every 253 days, which is the average number of trading days in a year, that it back plots a vertical line. So you can see what this indicator looked like a year ago or more. You can see a couple of years kind of marked here, and gauge where you think we are in terms of, you know, that kind of daily pattern, whether we'll have a little bit of a rally or kind of a sell-off. And the indicator also plots into the future, the next 3 days, what that average kind of pattern ought to be. And you can see here from today's data we should have a little bit of strength, maybe a neutral kind of bar, and then a continued strength here. I'm also going to show you what this indicator was actually showing a few days ago, leading into, remember we've had this big kind of sell-off from this day up here. We've had a 65-point sell-off from 1865.70 kind of around here into almost 1800 down here. And a few days ago what that seasonality indicator was showing, just leading into that little bit of strength here, was this pattern here with this big kind of sell-off from these kind of negative values down here. Bang, bang, bang. So the seasonality indicator on a daily chart was forecasting that weakness kind of coming on, and it played out beautifully into that kind of 65-point kind of move on the downside. But from there, the seasonality indicator is saying we're going to have a little bit of a bounce because we're in the middle of that sell-off, and then strength as the money's reinvested. There's one really important caveat. For these indicators to work nicely, particularly the daily indicator here, what I suggest is that you line up your charts to begin at the beginning in January 1st of a year. So this is particularly important for the daily indicator here, the seasonality indicator. I've used all this back history, kind of the good back history on the Emini going back to 1998, 1st of January here. Do that on your charts, and that will make sure that the indicator calculates correctly. If you just start this indicator off at any particular day of the year, the seasonality indicator will not calculate correctly. So remember to do that. It's the fix you've got to do. I don't think on the weekly chart, because it's all kind of based calculating beginning of New Year's, I think you're kind of okay on that weekly indicator, but I do it just in case, and let me show you just on here again. So 1st to 1st 98 here. Do that on your charts and you'll get kind of hopefully the same plots as me. So there we go. You'll be able to find these indicators at the bottom of this page. It'll be a free download. There'll be TradeStation Easy Language open format for you. I don't code for NinjaTrader NinjaScript, but if you happen to and you want to translate these indicators and allow me to distribute your version of the code, I would love to add them to the download. So get in touch if you've coded these for NinjaScript. And just last thing to say, they are free indicators, so please don't expect free support as well. Hope your trading's going well.